Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation, Understanding Bullish and Bearish Divergences. We talk a little bit about bullish and bearish divergences when we see them during our daily color guard reports each and every week. I thought it would be nice to go a little bit further and discuss how to recognize them not only on the overall market but individual stocks and industries and sectors as well. Divergences occur when a price trend and the indicator's trend don't align, they're opposite. So for example, we'll look at a few bullish and bearish normal divergences here today. There are a couple of other divergences, reverse divergences or hidden divergences. We'll just discuss normal bullish and bearish divergences. A normal bullish divergence is created when the price, again, of either the stock or the underlying market or an industry or a sector makes a series of higher highs, seemingly indicating to the naked eye that the, in this case, uptrend is strengthening. However, an indicator, sometimes an oscillator like the MACD or stochastics or RSI, is doing the opposite. It's hitting a series of lower highs and lower lows. This demonstrates that the bulls are losing their grip on the trend and the bears are ready to take control once again. It's not always imminent, but eventually you will see a breakdown in that trend and the market will, or the stock will, continue to move lower. Particularly when a stock's price or market price or industry or sector price becomes oversold, you want to pay attention for bullish reversal signals or bullish divergences. So in this case here, with the price hitting a lower low, again seemingly indicating that the downtrend is strengthening, our indicator at the bottom is doing the opposite. It's hitting a higher low. And this is really important to observe, especially in an oversold price situation. So let's hop into the program, and I'm going to start us on a market timing graph. I'm going to go to graphs here, and we are looking at an end of day market timing graph. VVC is represented here in candlesticks, and we're looking at the last year. It's been a brutal year. As we all know, the market has hit a series of lower highs and lower lows. The recent low was established in the middle of October. So during this down move here from the August 16th high all the way back down to the October 13th low, the market really sold off rather sharply at times. Created a new low. Again, if we just kind of zoom in here, seemingly indicating that the downtrend is strengthening. I'm going to put our relative timing indicator on the chart. Relative timing is a VectorVest proprietary indicator. It measures the short-term price trend and momentum. That's a key here in the indicator. It's not only a trend indicator, but it is a momentum indicator. It's an extremely smart and accurate indicator of price trend. So what we see here is the VectorVest composite hitting a new low, but we're seeing the opposite for the relative timing indicator. Relative timing indicator hit a higher low. So this is telling us that the bears, in this case, because this is a bullish divergence, again, bullish divergence when the market or the price of a stock, price in general, is hitting a lower low, but your indicator is hitting a higher low. I mentioned that bullish divergences are particularly important in oversold situations. Well, if we notice what the MTI and buy-to-sell ratio values were at that time, the market was extremely oversold. MTI below 0.6, buy-to-sell ratio below 0.2. So that observation, along with a bullish divergence between the market price, the VectorVest composite, and relative timing, really signaled the end of that downtrend. Now we retested the low that was established on September 27th. However, if I change our price from a candlestick to a line, we never hit a closing low. That was just an intraday low, I believe, on that day, October 14th. But you can see that the closing low was put in here on September 30th, and then the market rallied nicely, giving bulls a nice opportunity to participate once again. If I pull us out a little bit further, we can see that same phenomenon. Let me change our price back to candlesticks. here. Here in February, March, VectorVest Composite hit a new low. Doing that helps visualize the new low. But look at the relative timing indicator. Established a higher low. So with the naked eye, without using an indicator, it does appear that the downtrend is strengthening as of the hard right edge, March 15th, but adding the indicator and also recognizing that during that time, buy to sell ratio was right at 0.2, MTI was below 0.6, so the market was in a really oversold situation. Now this rally didn't last all that long, but it did give the bulls an opportunity to pick up some shares for a quick profit. What led me to tonight's presentation was some research that I was doing on industry and sector rotation. I was looking for the industry groups whose RT, relative timing, has gone up the most in the last 10 days. That's a really easy scan within VectorVest. If I go to the Unisearch tool, open up our Delta Searches Industries folder, we have a search in here called 10-day RT Delta, just simply looking at the industry groups whose relative timing has gone up the most over the last 10 days. So if I just run that search as of the close of December 22nd, here they are. Insurance brokers, relative timing has gone up 21%, almost 22% in the last 10 days. ETF short, not surprising, 16.5% over the last 10 days. Apparel, shoes. So I was looking through the charts, and I noticed something interesting. As of the hard right edge here, and I'm not looking at the last year really with this particular industry, I'm looking at the last couple of weeks. You can see what the price of the industry group has done since the beginning of December. Look at the relative timing here. Relative timing has hit a series of higher highs and higher lows, while the price of the industry group is doing the opposite. So this is a bullish divergence. Price of the industry moving lower. Again, without an indicator, it does appear that the downtrend here is underway. Now it's a new downtrend, right? Because the industry group price had been rising there for quite some time off of the October low, but it's breaking down. It looks like the uptrend is weakening. Downtrend is strengthening. However, look at the relative timing indicator. It's telling us a different story. It's telling us that, hold on, even though price is breaking down a little bit, it looks like the trend is still intact. The relative timing indicator is at 1.07, so it's still above 1. It is still considered favorable. So I looked at a couple of industry groups, and not all of them exhibit this type of behavior. But here with bank foreign, very similar type of situation. Here you have more of a hidden divergence almost, where the price is moving sideways, kind of moving along in this trading range. But look at the relative timing indicator. It's hitting higher highs and higher lows. Now, of course, it's not 100% guaranteed that price will break out to the upside, but it does suggest that this sideways consolidation period is just that, and a resumption in the uptrend is likely. And you can continue to look. So I just scrolled through a few of them, found another one here. Now this is not as of the hard right edge, but you could see the relative timing indicator actually hitting some higher lows with lower highs being established here for the price of the industry. Here was a bullish divergence back here in June, May, June, July. The industry price moving lower, relative timing, I mean, that is just picture perfect, and you could see the end of the trend. Now, this is 2022, so most of the move, no matter what we're looking at, has been lower. But these phenomenons here do signal that one side is losing their grip on the trend and the other side is ready to take control once again. I'm going to close out of our graph here. We can also do this, of course, on individual stocks. So if I go to viewers, go to the watch list viewer, just open up the S&P 500 watch list. Take a look at the top stocks within that watch list. So I'm not really seeing a divergence of any kind as of the hard right edge, but take a look at the rally that occurred at the beginning of October here. Here's Halliburton, stock price hitting a new low. Zoom in here. Look at the relative timing indicator. During that same time period, hitting higher lows. Now, I did mention earlier that bullish divergences, you really want to pay attention to the oversold nature of the stock's price. So I'm going to go here and add an indicator called Relative Strength Index, RSI, 14-period RSI, industry standard. When the indicator is below 30, that's considered oversold. When the indicator is above 70, that's considered overbought. So right at the end of September here, Relative Strength Index was below 30. The price of the stock hitting a new low. Relative timing, though, and this is how smart the indicator is, it told us then at the end of September that the downtrend was weakening, that the bears were losing control and the bulls were ready. And that was the end of the downtrend, and new uptrend began, giving the bulls a nice opportunity to participate again. So we can go through just a couple more examples here. You know, it does take a little eye training to recognize these situations. But once you do, they become really apparent. So I'll just go through a couple more charts here. Here, same thing with Caterpillar. Here's Caterpillar's price hitting a new low. Look at the relative timing indicator. What you would expect here at the end of September is the relative timing indicator to hit a lower low as well, kind of, following along with price. Right there, during that time at the end of September, the RSI was below 30, just giving you confirmation that price is in an extremely oversold situation. An oversold price situation with a bullish divergence is a very powerful signal, letting us know that the downtrend is weakening. Here with Archer Daniels, ADM. So what we're looking at here is rising price, but look at the relative timing indicator, hitting lower highs and lower lows. Currently, the relative strength index is not above 70, so we're not in overbought situation yet, but we are off for the recent highs here, and it does appear that the uptrend is weakening. Relative timing is telling us that, and relative strength index is actually telling us that as well. Nice little bearish divergence. These are, of course, warning signals. If you're long a position and you recognize a bearish divergence, you want to pay a little bit closer attention to price action. If you're short a trade and you see a bullish divergence, same thing. You want to be a little bit more proactive in how you manage that trade and make sure you're not caught on the wrong side of a strong rally. And if you're long, you want to make sure you're not caught on the wrong side of a complete collapse. So folks, I hope you enjoyed tonight's special presentation. Just some really important information that every trader and investor needs to pay attention to. Bullish divergences and bearish divergences give traders and investors warning signals of potential changes in the control of a particular trend. Remember, we are off on Monday. We have our special presentation Q&A on Tuesday. So have a great weekend, everybody. Happy holidays, Merry Christmas, and we will see everybody again next week. Take care, folks.
Yeah.